Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. One of the key factors which has been impacting the continued worrisome slowdown of the Indian economy, according to us, has been the reluctance of bankers to lend. Bankers today, according to us, are a scared lot. They have been reluctant to lend, and because of that, they are not really pursuing their core business of lending. If reports are correct, in the last 6 months, over 3 lakh crores of surplus money lying with banks has been deposited by them with the Reserve Bank of India instead of lending. These deposits with the RBI don't give them any very attractive return on the amounts deposited, but banks have preferred to keep their money in the safe hands of RBI rather than risking it loans. This is a matter of worry, and thus Prime Minister Mr. Narendra Modi has been very often exhorting bankers and reassuring them and asking them to lend freely and fearlessly, telling them that in case some of their bona fide decisions go bad, they are not going to be hounded and investigated by criminal agencies, which all of us would tend to fear. And that pleading by the Prime Minister on several occasions, reassurance to bankers, has actually not had much effect so far. Bank loans continue to be extremely subdued. They are not growing at a rapid pace as the economy would want it to. According to us, there's a reason for it. The banking system is still loaded with frauds and fraudsters. We still see with a very predictable regularity that some or the other large ticket NP account is unearthed, or fraud is unearthed, or fraudster is found operating in the banking system. Until those are not completely weeded out from the banking system, we doubt whether bankers would be willing to lend freely and fearlessly. Let's talk about two recent such cases which have come to the fore. The first one, a company called Frost International Limited. This company started its banking relationship with Bank of India somewhere in 1996. By 2011, they had formed a consortium of 14 banks which gave the company total loans to the tune of 4,062 crores. 14 banks plus Indian Overseas Bank today have a collective exposure of almost 4,500 crores to this company, and against this 3,592 are the outstanding loans which the company has not paid. In 2018, this account turned NPA. At that point of time, the company was required to pay to banks, as we said, 3,592 crores. In 2019, a forensic audit was conducted, and what turned out of the audit, the forensic investigation audit, was yet another standard format of cheating banks. The company was found to have given loans and advances to related parties to the tune of over 500 crores, never recovered, money diverted. The company was found to have indulged in rampant window dressing of its books of accounts, and in that process, it showed transactions of over 20,000 crores by way of sales and purchases with related parties. These were utterly bogus transactions, but they were shown on the books in order to show a rosy picture, in order to show that the company has been performing very well. All of them were actually bogus, and because of that, it was found in the forensic audit that all the stocks that it was claimed to have in its books of accounts and all the receivables, which collectively were worth over 1,000 crores, were non-existent. This had been a pure, simple case of cheating by collusive authorities, bankers, by manipulating the books of accounts, by showing a rosy picture which was non-existent, which nobody questioned. This was a format, and we have heard of it very often. Bank of India filed a complaint with CBI sometime in January 2020, saying that there has been a case of forgery, cheating, misappropriation, and criminal diversion of funds, and the matter is an investigation. According to us, this was one simple case of frauds, not sophisticated, and it could have been very easily unearthed. Why do we say so? Frost International had an unbelievable business according to us. It dealt in a large number of commodities, which is actually not acceptable. It dealt in agro products, it dealt in petroleum products, it dealt in coal, mining products, metals, bullion, plastics, textiles, chemicals, and must be many more. To us, it raises a very clear suspicion. this kind of a business model actually means that there was no business. It had a simple business which was showing a rosy picture in the books of accounts in order to cheat banks. And this could have been found out only if somebody thought, how can a company be in this kind of a diverse trading? The second thing which is noteworthy is only public sector banks have an exposure to Frost International Limited. No private sector bank or foreign bank is involved. And to us that means that in this journey from a zero exposure to bank loans of almost 4,500 crores, Frost International must necessarily have had a godfather in the political and bureaucratic system. That is how bankers must have been willing to give these kind of loans which were very clearly not warranted, and no action got taken right till the end. Thus, when you see only public sector banks and the exposure rising year after year and financial statements and business being bogus, it clearly means there was a godfather. Interestingly, while this company is said to have its registered office in Mumbai, its banking was entirely conducted from Kanpur. That again should have raised suspicion that why is a Bombay-based company having banking limits and so-called operations in Kanpur? It only means that it had some godfather there or collusion was easier there. In this company's case, again interestingly, out of the limits of 4,062 crores sanctioned by the consortium of banks, 3,931 crores was by way of LC and non-fund limits. These have been misused. That's what a Nirav Modi also did. Nobody decided to look into this reality and it continued. Finally, the banks got cheated. Further, as against dues of 3,592 crores outstanding today, the securities available with the banks are only to the tune of 185 crores. Somebody in the system has colluded very rampantly. How can it be a situation where thousands of crores are due and the security available with bankers is a mere 5%? Somebody was certainly giving a huge fillip and protection to this dubious fraudulent group. That of course gets us to a very common observation we make. The auditors colluded, independent directors colluded, bankers colluded, every possible agency colluded, and this kind of an exposure built up. In our opinion, even the inspectors of the RBI who would have inspected this bank and the branch also were negligent. We have no reason to say they were collusive, but they were certainly negligent. So, one blatant fraud. The second one concerns DHFL. The Enforcement Directorate recently has come out with findings related to DHFL, and that is yet another blatant fraud. And as we said, these kind of frauds, unless they are not weeded out, the system is not going to be rectified. In the case of DHFL, the Enforcement Directorate says that the promoters siphoned away 12,773 crores through 79 shell bogus entities by showing 1 lakh bogus loans. That money, the ED says, has gone back to the promoters. That money was used even for criminal activities, including financing the underworld don Iqbal Mirchi. In that manner, DHFL and its promoters siphoned away money, and this was done between 2010 to 2015. Again, the system has colluded somewhere. People have been negligent somewhere. Authorities have looked the other way. Otherwise, how could such a huge fraud have been committed? In fact, the forensic audit report of KPMG, which was issued in October 2019 in the case of DHFL, says that the diversion of funds is exceeding 20,000 crores. In our opinion, thus, the entire saga of frauds and fraudsters in India has not been fully unearthed. The train continues. Until these frauds are not totally found out, exposed and punished, till such time, according to us, bankers are going to be a scared lot. Bankers are going to be unwilling to lend. But then, let's also be clear, it is bankers who by their own collusion, negligence and incompetence who have brought themselves to this sorry state of affairs. Till this doesn't improve, do not quite expect bank lending to go up. And that's where lies one of the key challenges of reviving the Indian economy. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.